Dzień dobry Państwu.
Good afternoon, ladies and gentlemen. My name is Marcin Lauer. I represent the Investor Relations Office of Tauron Polska Energia. Inviting you to the meeting, when I was inviting you to the meeting last Friday, we assumed that we would be talking about the summary of the full year for Tauron and the plans for next year. However, today we signed the agreement that closed the deal to take over Vattenfall assets. So probably this subject will be the main topic of our meeting today. The meeting will be conducted by Mr. CEO, Mr. Dariusz Lubera, and CFO, Mr. Krzysztof Zawadzki. Let me now ask the presidents to present to us the details of this closing of this deal, and then we will invite you to ask questions. Thank you very much. Good afternoon, ladies and gentlemen. This is true. The agenda is richer than we originally planned. It just happened that on the 30th of November, after 2 months plus, we got the clearance from the antitrust office, and we were just able to close the deal. Just to remind you briefly what was purchased, because this piece of information is already available. At this point in time, Tauron is the owner of the GZE shares, so Tauron is the owner of a distribution line of business, supply line of business, Vattenfall Network Services, Shared Services unit, Vattenfall Volyn unit, and that would be all about that. And ladies and gentlemen, the GZE group, this is how I call it, 1,600 persons employed, the territory covered 4,221 square kilometers, and on this territory 1.1 million customers. Just to give you a comparison, such a branch of Tauron distribution that covered the similar territory, 250 up to 300,000 customers. So this just to shows you the density of Vattenfall distribution business, the density of recipients, of customers. The data for 2010, of course, here, because this is the data we were provided with during the due diligence. The capex in the region of 245 million PLN after 10 years of investing a large part of the assets, almost 46%. These are the young assets following the upgrade that are less than 20 years old. Similar structure of customers as Tauron, a large group of this so-called non-household recipients customers, so business customers, 442,000 business customers, enterprises. Let us look what it would be like if the merger took place in 2010. The revenue, 18.6 billion PLN combined, consolidated. Let me remind you of our consolidation adjustments in Tauron, because when we are presenting the results for 2012, we will be comparing it to the data that includes our full trading on the exchange. EBITDA similar to 3.1 billion PLN. Important, the distribution line of business, increase of the distributed volume of electricity, almost 48 terawatt hours of electricity distributed in total. That would give us a definitely leading position on our own in the distribution line of business in Poland. And for your information, what's the ultimate RAB, regulatory asset base, 12.6 billion PLN combined sale. This is the same number of customers, and the increase of volume of 6.8 terawatt hours. So in 2010, according to this data of 2010, Tauron would have supplied 30.1 terawatt hours almost. And finally, you can see the share of distribution. If you look at the structure of EBITDA, distribution is a dominating contributor based on the 2010 data, 46%, 38% in generation, and also the contribution of supply doubles from 3 to 6% in the total EBITDA. to show you the geographical location of the main players on the Polish market in the distribution line of business. This hole that you can see there in the Tauron, surrounded by the Tauron territory, is now in the hands of Tauron in the south of Poland. So Tauron, along with GZE, is the largest distributor of electricity, way ahead of the competition. The next one in terms of volume, PGE 30 terawatt hours, and we are close to 50. The number of end customers, also Tauron will have the largest number of them, and in terms of revenue, you can see that we are getting closer to PGE. The entire process, ladies and gentlemen, next slide please, took about 9 months. Let me remind you, in 2010, in the fall, Vattenfall just mentioned for the first time that they were changing their strategy. They were divesting from several countries, including Poland. But as a matter of fact, this transaction picked up steam at the end of March, beginning of April, when we selected our advisors and the works were commenced. In April, we conducted the due diligence research, and the non-binding offers were submitted on May 16th, and the binding offer was submitted by Tauron on the 29th of July. And please have a look. It was 20 plus days, and Vattenfall selected our bid, selected us to be a partner for the SPA agreement. It was, of course, a contingent agreement. As I mentioned, the antitrust office, after 2 months and a few days, gave a clearance for this acquisition, and today we can say we have finally closed the deal, and Tauron, I can tell you right now, is the full owner of GZE. The financial parameters of this acquisition and a few words about the synergies that we were interested in. Let me now hand over to the CFO, Mr. Zawadzki. If you look at the value of the deal, it's 4.62 billion PLN. As you know, this amount included cash deposits and the so-called Vattenfall debt towards GZE company. Today we paid exactly 3.5 billion PLN. This presentation was prepared a few days before, so that's why it shows 3.62. The difference between the value and the amount paid is the value of a debt that we assume towards GZE companies. So we offset this debt versus the debt towards Vattenfall for this transaction. End of the year, we estimate that some cash will also remain in the GZE companies. This is the cash that was left in those companies for those companies to be able to operate until the end of the year, until the moment that they enter the cash pooling system, the central finance planning of our group. What did we use to finance this acquisition? Also, we communicated that to you. We issued 3,300,000 bonds. This is a program we launched in December 2010 to refinance our debt. This program was expanded from 1.3 up to 4.3 billion PLN, and the 3 billion worth tranche, the third one, and 300 million from the tranche B from the original program was used to finance the deal. The balance we used to finance our own cash. These 5-year tenor bonds, the cost of financing 6 months WIBOR plus the margin that we negotiated with the bank. The estimated financial cost for 2012 is about 220 million PLN. And these are the key parameters as far as the financials are concerned. What will be the impact of this acquisition for the financial statements for 2011? I'm speaking on purpose 2011. You know, some financial statements results are included into the consolidated financial statement from the moment we take over control. So practically with the end of today, as far as the total assets are concerned, it's 4.1 billion PLN. This is what will be shown in our total assets balance on the balance sheet for 2011 consolidated. These are approximate values, of course, so please treat them this way. First of all, we don't have a full financial statements for 2011. Secondly, this statements will be subject to an audit, and finally we don't have the full month of December, which is quite a significant month. If we talk about the assets, estimate of the assets, we looked at the performance, actual performance as of November 30th, 2011, and we adjusted those values to take into account those accounts payable or receivables that can show up in the consolidated statements and the advance pay dividend that will be paid out to the previous owner still. If we look at EBIT, we estimate it also based on the 11th months of actual performance this year, plus the forecast for December 2011, which was in the materials provided to us by the seller. If you look at the operating profit, it's about 9 million PLN. Contribution, if you look at the EBITDA, it's about 15 million PLN, but will be additional shown on our financial statements. And the estimate was done similarly. As far as the debt level is concerned, of course, the deal will have a negative impact. The debt will go up due to this issue that we made, and we estimate the leverage ratio, net debt to EBITDA ratio, we estimate to be about 1.0 end of this year. Expected synergies, we were hesitating for a long time to show you these numbers, these figures, but we finally decided to satisfy your curiosity. Of course, these synergies were estimated during the diligence process based on the materials that were provided to us at that time. I think after we have closed the deal, we will have more time to verify those synergies in detail. We'll have direct access to all the source materials, but these synergies were estimated based mainly in the three lines of business: distribution, supply, and the customer service area. These are the names of our units provided. We looked at the revenue, OPEX, CAPEX. The synergies that we are showing to you now, these are average annual synergies in the 2012-2016 time frame. If we are saying average annual synergy for a given year is about 30 billion PLN, so you can easily calculate that we're going to arrive at about 150 million PLN in the 2012-2016 time frame. Additional synergies that were estimated by our advisors that should be present in this type of transaction, called the so-called inherent synergies. They are worth about 254 million PLN. Also, during that period, this additional amount that we may generate. The synergies that we estimated were, of course, probability weighted. Each synergy was assigned a certain probability ratio of its actual performance. We are showing also under these procedures, so practically the amount of these synergies may even be higher. If you look at the revenue, 1 million PLN in the distribution line of business, 9.2 million PLN in the supply line of business. As far as OPEX, the estimated savings 2.8 PLN in distribution, 7.8 million PLN in supply, and 7 million in the so-called support area. CAPEX, about 2.2 million PLN, the estimated synergy. In total, 6 million PLN in distribution, 17 in supply, and 7 in the customer service area. A brief description of those synergies that were defined by our lines of business, so by the distribution and supply lines of business. If you look at the revenue, the synergy is mainly due to the reduction of the cost of illegal and electricity consumption through the use of what formerly Vattenfall used dedicated advanced solutions in this area, the methodology that they use. If you look at the OPEX, reduction of share in the trading of electricity on the balancing market, reduction of the cost of commercial balancing, reducing the volume of demand for electricity during the Euro peak for the balancing difference, common policy in case of transformer reserves, eliminating the redundant functions such as management function and support functions. If you look at the CAPEX, mainly due to the better bargaining positions in the tenders for the CAPEX implementation, economies of scale, integration of a grid, this is 110 kV, and optimizing, streamlining the issuing of conditions of connections for new customers and the net grid expansion. This is not the full list of initiatives, not the exhaustive list that we undertake. If you look at the supply, revenues increase of gross margin increasing, the locked-in customers, you know, I think that Vattenfall had the largest number of customers that were locked in, loyal customers that were already in the supply portfolio for a period longer than 1 year. Managing the open portfolio position, if you look at the OPEX, cost of energy trading and marketing costs, these are the costs that will be carrying jointly for the entire supply line of business. There are also other synergy areas, the ones that were not quantified, or it was not possible mainly to quantify these areas, but the ones that could generate potential savings. Renewables, till July this year, we didn't have any wind farms. We bought the first one at that time. This wind farm was much longer in the Vattenfall group, so the competence in terms of operating such wind farms is also in the Vattenfall group. So we would like to take advantage of it. Tauron Customer Service, Vattenfall Business Services Poland. This is the company that was providing services for all Vattenfall companies in Poland and in Germany. They served 5 areas: customer service, HR, finance, accounting, and IT, which was the largest part. If we look at the procedures that this company employed, that I think the number of activities related to the shared services, support services are much simpler, much more transparent. The practice in terms of supporting a larger number of business processes is much more well developed in the Vattenfall, and we want to take advantage of this know-how. Financing. When I was meeting investors, I was quite often asking the question, what will be the impact of Vattenfall assets on our risk profile, and whether we can take advantage, thanks to this acquisition, in the ability to acquiring finances or to reduce the cost related to the acquiring financing. The answer was clear. As of today, we are becoming a more defensive company. 50% of EBITDA contribution will come from distribution, which is a predictable line of business, and this, everyone agreed, will improve risk exposure, risk profile of our company, and will maybe help us to improve a better rating or defend the one that we have, or maybe allow us to acquire better, more alternative means to finance our capex. In IT, a lot of know-how, competence in the GZE group, so we would like to take advantage of the know-how in the support of the systems and the common utilization of infrastructure. And the purchasing, procurement, I mentioned when I was talking about the capex before. We also take advantage of the economies of scale when we'll be ordering services and materials that our group will be purchasing. Ladies and gentlemen, briefly, that was the description of the deal and its consequences. What will be done next? Further steps. Further steps, of course, we have to think how, taking advantage of the fact that starting from January 1st, will become a for tax purposes, a tax capital group. How we will think how to integrate in order to take full advantage of this new structure, how to integrate GZE. After we've selected the optimum version, today you can practically say that this will be ultimately done in such way that the distribution line of business will be incorporated into the distribution line of business. How it's going to be done in practice, who will incorporate whom, we'll see. Maybe the analysis will show that the Vattenfall distribution or the Tauron distribution, currently the Tauron distribution, we have to get used to that there's no Vattenfall anymore as an owner. So I think it'll take some time before we decide on that, and we get used to it. And similarly in terms of other companies, so to start this process and to carry it out next year in the best possible way, and whether we'll be able to complete all actions with respect to all units, all lines of business once we have prepared the schedules and the project. But of course, meetings are already underway, and preliminary setting up of work groups is already underway, although it's a pre-holiday season period, but we're not wasting a single day. Already tomorrow we are starting the first meeting that are aimed at preparing the process of integrating the assets into the Tauron group. I would like to ask you to approach these synergies in the way that we presented, but as our CFO mentioned, we were thinking, I'm convinced the synergies will be different, in some areas higher, I would say. And I would justify that in such a way that we are showing here over time the takeover of the business part assets, but the part of those assets is also very good in our opinion, and also in our opinion, personnel. If we look at what Vattenfall had overall in Europe, it turns out that especially the distribution, Vattenfall distribution was #1 ranked. So unique competence of this personnel is, in my opinion, the key element that will be jointly with them taken advantage of. Ladies and gentlemen, to sum up, because our plan was to summarize the year, but this deal dominated. The year is not over yet, but there are only a few days left. So one may say that all the main objectives we as a management board set ourselves and set for the group in terms of restructuring the entire group, reorganizing the entire value chain, we have accomplished all these objectives. Let me remind you that the 30th of November was not only the deadline that we were supposed to get the clearance from the antitrust office, but we also registered the amended Articles of Association, which enables us to take over in fully the competence by Tauron parent company in terms of coal trading, carbon credit trading, biomass trading, because this change, this amendment enabled us to do that. That took place on November 30th. Also on November 30th, we also found out that we got the clearance for setting up, forming the Tax Capital Group, which is the largest tax capital group in Poland. And starting from September, we already had one entity in each line of business: Tauron Distribution, Tauron Heat, and Tauron Supply. We already had from January. So now, anyhow, I've already mentioned all of them. And of course, the acquisition, that as you can see, took us 9 months altogether. So summing up all the main objectives that we set ourselves, in our opinion, and soon they'll be also evaluated by the supervisory board, have been accomplished, and we are facing the next year. But one of the main tasks would be to integrate the Vattenfall assets into our group. That's all from me. Thank you very much. Thank you very much for the presentation. Let's move on to the Q&A session. Please ask questions to the microphone that will be handed over to you by my colleague, please. Mr. President, if I may ask, it's today's or yesterday current report, you are saying about the 16 billion PLN debt for 2015-2016 time frame, if I remember correctly. And here it looks that you have 220 million, you're saying your cost of financing is a bit about 3 billion. Of course, it'll change in the future, but anyhow, this balance sheet would look different, worse, well, different, let's say. How can you, could you please comment on that? And if you talk about integration, do you in some way, and if it's there, in my opinion it is, will you be a single body, not only from the capital point of view, also from the social point of view? What about the social agreements that you, in both entities and in both directions, if you could comment on that? Let me start with the level that you mentioned, but it is in our current report, when 14 billion estimated potential debt of our group. Of course, this is not the net financial debt, this is just the debt, and assuming that we'll be implementing the full CAPEX program, the one that we still have today approved. But we're also saying, and this is how you should interpret it, that we don't want to go above 2.5 net debt to EBITDA leverage ratio. And this is also the main objective of the government for the management board for the next few years. So it turns out that in 2013, in 2012, 2014, if the leverage ratio goes up and goes closer to this leverage ratio that you mentioned, we'll have to shift maybe some capex or give up some investment projects. This is the estimated level, but assuming that the full capex program, 44 billion PLN, goes ahead. And so we need to take into account the fact that 2.5 net debt to EBITDA ratio, this is the leverage ratio that we don't want to exceed in the 2020 timeframe. This is actually what we stated, I confirm, but it doesn't mean that this level of debt we will actually achieve, unless the forecast EBITDA in those periods will also be accordingly high. Social agreements. If we now move on to the social part, because this is how I interpret your question. Ladies and gentlemen, GZE, the social agreement that took 10 years, expired in spring this year, around March, April. And also you have probably seen in the media some rumors that the trade unions were expecting the plan to sign another social agreement. They were expressing the surprise that they didn't get a new one. Since we didn't get this agreement, we didn't look at it, we didn't evaluate it in the acquisition process. This is the information we got, and we have another meeting scheduled during which the Social Party will be expressing their need for some guarantees from our side. But to make it clear, from our side, our position is as follows, that the Tauron Group, the existing social agreements, are expiring. Some of them in 2013, some of them in mid-2014. So it's difficult to say that the assets companies that we acquired via a purely market arm's length process, acquisition process, that we should burden with another burden that what we have today in our group. But if we were to expect for another 10 years, we would arrive at the 20-year guarantee period that you can find it nowhere. So briefly speaking, the Social Party at GZ that we will be meeting next week is aware of the fact that generally Tauron Group, the existing social agreements in our group are expiring, and we are not planning on providing any additional guarantees, labor guarantees. Afternoon, Piotr Dzięciołowski. I have problem to come up with those figures. 14 billion PLN, 2.5 net debt to EBITDA figures. I have problems with you get it 5.6 billion EBITDA. Today you have 3. I can imagine that you have problems because long-term compensations expire, carbon credits kick in. So which capex project will be deleted first? Or maybe I'm wrong somewhere, and maybe then you could maybe comment on where I'm wrong in my calculations. Mr. Piotr, that I'm sorry that you have a problem. It's your problem, but I think we are all sitting in this room and we are not able to understand where can you arrive at 14 billion PLN debt, 5.6 billion debt with 700 million which will drop out in 2013. So in my opinion, the deal with Vattenfall may somehow be result in such a way that your balance sheet will crack. I think it will not crack. Of course, we are monitoring the balance sheet all the time, and I can assure you that any further debt, any further project that with respect to which we didn't make the final decision on the implementation will be monitored in detail. This EBITDA will be calculated for this debt will be based on the EBITDA, consolidated EBITDA, including Vattenfall. So we are talking about 3.5 billion almost, talking about EBITDA. So EBITDA in 2014 or 15 of 5 billion is of course realistic. But answering your second part of the question, we have some projects that were highly advanced, Bielsko, Jaworzno, which are to be commissioned 2012-2014. We have some projects, and I can imagine they stopping them. So some other project that will be starting the procedure in 2012-2014, and at that time, each time when we take the decision, we'll be analyzing whether going ahead with each project is possible. Every quarter we look at the CAPEX project. Each time new initiatives are reviewed in detail, and furthermore there's also analysis made with respect to the macroeconomic condition of the impact of the profitability. Stalowa Wola, Jaworzno are not flexible, these projects. So which CAPEX projects you can get stop? Because we are saying if we look at the debt level, then we'll cut the projects. I'm asking, so we will not stop Jaworzno halfway through, Stalowa Wola as well. So should I draw the conclusion that some of the renewables project might be the first one to be stopped? So when you look at your CAPEX plan, which project, in case there's a negative scenario evolves in terms of electricity prices, which one will be stopped? Let me put it this way. Please assume that this is a certain thing, an axiom that the main criterion would be not to go above 2.5 net debt to EBITDA ratio, leverage ratio. This is an axiom, a certain thing, a sure thing. We will be asking, even applying for a second rating from a second agency next year. So that's also definitely certain. So this is our approach. Today's CAPEX projects that are advanced, the ones that are being implemented, I'm saying, are not in jeopardy. We don't threaten us to be in default. The next ones that we are going, but moving ahead, you have seen the bids for Stalowa Wola. I have not determined yet which bids will be selected, because the price is a 70% criterion, and there are other things being taken into account. Both bids are much lower than we assumed in our CapEx plan. So this is one big project, CapEx project. The second one, the Jaworzno project. It's a similar case. First of all, the resolution and the selection of a potential contractor is next year, second half of next year, optimistically speaking, and more realistically end of next year. So the question is how the procedure moves ahead and how many appeals we'll have in the second stage. So in our projection, we assume 6.5 billion. We know what was the result of a tender, for instance, in Opole, and the question is what will be the market's response next year when we enter the next stage of a downturn, probably. So also we assume that here we will get some reserves. Finally, we can imagine the following situation. If we were to surpass the net debt bid, the dangerous one, so at that stage we can still look for financing in the form of a partner, for instance. So there's a number of options that we have, and there are even partners willing to enter the Jaworzno unit, the Jaworzno CapEx project. We are not saying about that. We are saying we will finance Jaworzno by ourselves. Even for the Jaworzno unit you mentioned. My question is to what BG recently said. They said that it's not profitable to build further units following Opole and Kozienice. We know that Rybnik is going ahead, and the North power plant is to go ahead. So aren't you afraid of your rates of return? Secondly, maybe there's rumors, I've heard that there's a new model of OPEX for distributions to be generated, since this is 50% of EBITDA. What can the new model of OPEX in distribution bring? First of all, I'm glad to see PG that once they've taken their decisions, they want to to control our investment decisions, but we have our own model. According to our model, we're making calculations, and please note that we are talking today about the capacity replacement project. So capacity that's less efficient will be decommissioned, and this will also have an impact upon the improvement of EBITDA in the subsequent years as we commission new units. This is the Jaworzno case, and let me remind you also other hard coal-fired units. Tauron is not saying that we will be building, so this is in fact the only one. Second question was, I don't know what works underway today, and the next tariff for 2012 is underway today in the approval process, and it's fully implemented according to the regulatory asset base. Yes, regulatory asset base, that's one thing, and the OPEX model is a different thing. I've heard there was some working meeting related to the new OPEX benchmark, cost benchmark in the distribution line of business, but the model is not yet included in the guidelines for 2012. So you still assume that, let me remind you that this is the consequence of a cooperation between the DSOs and the regulator. RAB is one thing, the second thing is OPEX, and the third one, the balancing difference model. These are the three things that must be done according to the consistent standard prepared in Poland, handled in Poland. This is the consequence. The problem was that for a moment there was no president of the regulatory office for a while, and these works are the consequence of that. And once these works are commenced, until the moment they enter the implementation, is at least a few years. Regulatory asset base, it took 3 years of preparation of work before the regulator signed this model off. So, if, I don't know, if there's an expectation or idea that there will be some big change or cutting of the OPEX, no, I think it'll be more based on the benchmarking, standardizing, coming up with some standards, and we are doing nothing else in the distribution today, but we are bringing the cost side to the level that the one that will take over in a moment. We're taking over Vattenfall, for instance, which is a much better picture. I have another question. Did we calculate the cost of financing? 220 million in the first year, 3.3 billion worth of bonds, 6.7%. What margin you're paying? 200 BPS? How is this done? And what will be the impact on EPS on this? What's your EPS, earnings per share, bottom line? What will be the impact of the bottom line? I will not be paying what margin we are paying because it's a company's secret, commercial secret, but I give you a hint. I gave you 6-month WIBOR plus margin, and I was also saying that we were 100 BPS above WIBOR was the debt that we refinanced. So this is another hint. So probably we will arrive at what you just said. And the impact on EPS, earnings per share. What are the GZE results in 2011 versus 2010? Because we are still working on the ones that we saw the figures for. Let me just interrupt for a moment. Excuse me. If you look at the fact that this is the result that's assigned to the half of December, because it's not high, and because it's not high, and you allocate some cost of financial cost to the part of the full month of a part of a month, we will be talking to the qualified auditor, so you can arrive at practically zero impact upon EPS, or even slightly negative. The question. Negative, how much it will be the negative of the cost of financing and how much will be the next profit. But I'm talking about the next year. Yes, this for me, this year is coming to an end. So, but practically you can roughly estimate. We are not talking the GZE net profit. We will have to look at the net profit of GZE and the financing costs you have access to. Okay, thank you very much. Good afternoon, Robert Cabot, WC. Talking about the new CapEx projects, the Blachownia unit that is to be built jointly with KGHM, some update will be a gas-fired or hard coal-fired unit. Well, this has clearly been determined already. It's going to be a gas-fired unit, and we have a delay here that's beyond our control. Let me just remind you, we were planning and we wanted to buy the SPV in September, but until today we've been waiting for the permit of the European Commission for the concentration of these two units, and we are now taking actions to get to the decision makers on individual basis. But both companies, KGHM and Tauron Generation, got the corporate approvals, and once we get the clearance from the Commission to set up the SPV, we are in the starting blocks. So once it all happens, we have a shareholders agreement. The first capitals are prepared, and this will go ahead. And it's been predetermined. It's going to be gas-fired. The talks are underway. We know what investment is required from the gas system. The operator of the gas transmission system says they'll be on time to be with CapEx in order to provide 1,200,000,000 cubic meters of gas. That's the amount will be required for this gas unit. At what electricity prices you can get the rate of return, the cost of capital will be reimbursed in the type of this project, because we know gas-fired projects are controversial and not necessarily they could be profitable. Up to what price this project is for you profitable? The entire benchmark, the entire calculations are conducted in conditions where, assuming that carbon credits will be 100% passed on in the electricity price. The question is today, how much the carbon credit will cost. Today we are observing a strong decline of the carbon credits prices on the market. It's €8 today. In a moment they say it might be 4. What's your forecast for carbon credits today? For next year and for 2013, as you know, the price of carbon credit below €10, 8 something. The contracts for 2013 are not much above that. I don't know what volume this is, not much. But we were showing during our last conference that this forecast. Are you buying carbon credits for 2013 already? Because the Western Europe producers are probably not hedged much. So how do you see that from your point of view? For now, we have not been buying yet any large volume. Some deals we are doing, but these are the transactions on very small volumes. So if we are buying, we're not buying large volumes. So these values are not material. Those deals are not material yet. But if we talk about the forecast for 2013, as you mentioned, it's a very difficult question, because today we are talking about €20-25 range. This is what we forecast. And today's price shows that, let's say, what the investment bank says, 21, 20 €6. In our opinion, it's too much, but in our projection we have something included. But today's prices show that, taking into account the fact that the carbon credits in 2013 will be quite abundant, so practically the price, I would say, will not be much higher than today's one. The Chalchnia project could be one of the projects that we could possibly stop as your debt goes up, or is it practically the project that will definitely go ahead? If this is the project with a partner based on the project finance that is not included in our balance sheet, so then it will not be a project that will be willing to stop. So this is the project that, first of all, is not included in the leverage ratio, and this project will be, its financing will be again individual for the financing party, similar as Blachownia. Sława, excuse me. Thank you. Thank you. Anyone else has some questions? If the President would be kind enough to share the comment that he's surprised, nicely surprised, to see the level of bids for your contracts, but it seemed, and I'm still convinced about that your two experienced armies are facing each other, yourselves and the contractors, contracting parties, where they have access to the data plus experience, data based on which the bid is submitted. Those bids should meet somewhere, converge with a maybe slight difference. So my question is then, because I can imagine that the contractor is able to reduce those price offered thanks to some better organization by 2 or 3%, let's say steel volume or some other equipment, would allow maybe to arrive at some saving that, based on what you indicated, Mr. President, if I understood you correctly, this is a larger scale, larger order of magnitude of the savings. So my question is, there some discrepancy as we had happened in case of road construction contracts? I don't know, to use this example. Why these reductions? Where do they come from versus your price expectations, that the bids you're getting from contractors are lower than the prices you were expecting? What is the reason? Maybe I was not very clear when I was giving you this information. I just told you that based on what we ourselves estimated to be the average price, assumed to be average price for the project, it was higher than we assumed. The bids we expected about 7 billion, and the offers we got 1.7, 1.3, up to 2 billion. However, the bids of 1.3, 1.4 are close. Only one is much different, the 2 billion one. So also I said it's not today predetermined which bid will be finally selected for implementation, but definitely I can say the one for 2 billion will not be, because the price weight is about 70%, and the commission, the committee, tender committee is working in detail and will be working for some time yet to give a recommendation to the ordering party, namely the management board of the SPV, which contractor is to be selected. But all of these bids that have been submitted are bids at first sight look to be very well prepared, ideally fit for the job. This is also the result of the fact that we, on the market, on the demand market, we have a situation that there is not too many investment projects like that, especially the gas-fired unit. And the Spanish bid just happens to be Spanish bid. Iberdrola one looks lowest, which today is operating in Spain on the market, that there is a big crisis there. And also the issue comes up that there is an investment gap generally in Europe. So we can take advantage of that, of this downturn in investment projects. As a potential investor ourselves, we can take this advantage. Ladies and gentlemen, please. I have a few questions from me that I have left. First of all, I'd like to ask whether in GZE, is there some potential yet for reevaluating regulatory asset base or to increase the return on RAB as a part of a process that's taking place in your case? That's one thing. And how large these savings? 1% of arriving at the full return, or 2 percentage points? And the second question that I have, could you comment on what's happening on the hard coal market in Poland. We have been discussing when you were showing the Q3 result, but you had to purchase some hard coal on the spot market, on the spot prices. So what impact it would have on the spot price of electricity, and for next year what will be like, whether the Silesian hard coal mines will resolve their problems. Let me start with the potential in the regulatory asset base area. When we were doing the due diligence, we received the materials. Also, the planned forward curve of the full return on RAB was presented. At that time, the seller was estimated at that time the deadline to be 2015, 2016. This should be the first year when we will have a full remuneration, full rate of return on RAB. And today I don't have any reasons to dispute their estimates. As a matter of fact, the level of CapEx is going up in GZ, but it's not going up in an exponential manner. It's about 5, 7, 8% year over year. So taking into account the depreciation level, the level of growing CapEx, one also shouldn't expect the regulatory asset base as such without larger CapEx would go up much. I think you should assume the level of RAB revaluation as is indicated based on the CapEx. It is clear that each time the regulatory asset base increased by the CapEx, new CapEx, and reduced by the depreciation, since GZ is replacing more than depreciates. So I think this is a hint for you. The answer is quite clear. Talking about hard coal, first of all, I can say the problems that we indicated about the related to hard coal were overcome in such sense that there is no threat for the supply in this year. So we've overcame problems with supply volume by buying more through various procedures, tenders, and of course, and these are not the prices at the highest spot market prices, such as 19 per gigajoule, but much lower ones. Let me remind you that we have 3-year contracts, so 2011, 12, and with some suppliers for 2013 as well. Contracts based on prices that are only inflation rate index, and this is the 2012, but we're assuming that in 2012 we will overcome our problems in PKW that we had in the second half of the year, and at the end of this year we finally overcame it. To mention the water problems that we mentioned before, as you have seen, we are changing the management team there. Recently, the new vice president for technical affairs was selected. Also, generally, we are changing approach in dealing with PKW, but on the hard coal market, generally speaking, the prices were elevated due to the increase of demand and inability by the mining sector to satisfy the demand fully. We were trying to play with import, so we get supplies. Import didn't work out. We are using the domestic market supply now, but for volumes of several or more than a dozen thousand tons on the spot market. So how much it costs you to generate electricity when based on the spot market prices of hard coal? Until the end of the year, it has not the slightest impact upon the price on the spot market. The spot price market is still based on what's happening on the exchanges, even if we have higher prices still not used. Okay, thank you. Thank you very much. Anyone else has any question? If there are no more questions, I'd like to thank everyone. Our members of management will be at your service for a few more minutes. Thank you very much.